Good afternoon, ladies and gentlemen. Jeremy Johnson, back again with Journey Home Realty for your monthly market update for the month of May in 2023. We're going to entitle this one, this is going to be a one episode again, but we're going to entitle this one Education and Confidence. And as we've talked about in the previous months, obviously what we want to do is constantly educate, because buying homes can be scary, and our job is to make you confident through education. So a couple points I want to hit on this month is the home prices. We hear a lot that individuals think that the market's going to crash. They think house prices are going to come down significantly, and if you're paying attention to the news articles and things out there, I can see why and I can understand why. So, and educate you guys so you guys can make that right decision if purchasing real estate is what you guys want to do. So, the first one we're going to start off with a slide is the home price declines have stabilized. We talked about it a couple months ago, and there was a bunch of articles out there about how house prices were going to plummet in the 6, 7, 8% area. We got nowhere close to that, but I would tell you in the first quarter of this year, house prices across the nation have increased 1%. And this slide shows you on a quarterly basis, home prices rose a seasonally adjusted 1% in the quarter one of 2023. The fact that prices rose slightly in the first quarter is evidence of significant pent-up mortgage demand despite ongoing affordability constraints. So this next slide here, again, always powering you with facts over emotions. It shows you here through Case-Shiller, FHFA, and CoreLogic. You can kind of see over the last year price increases versus decreases, and we did hit a little period of decreases. As you can see, it started in July of last year, and it kind of went through, December, January of this year, where we were seeing it. But it was nowhere. I mean, the highest month was in the 0.8 area, and we had a lot of 0.1s and 0.3s on price declines on house prices. But you can see here we're in back-to-back months of house prices increasing, and CoreLogic actually has it in the month of March increased 1.6%. So for those of you that are thinking, hey, I'm going to just wait on the sideline until house prices decrease, you could be waiting a while, and you can kind of see the facts that, and that's really based on what we've talked about in previous month. That is based on the lack of inventory across the nation that we're having. It's driving, just pure and simple fact, driving the house prices to stay pretty neutral or slight increases, even with interest rates in the 6.5, 6.8 area. And I'll tell you too, just how quick and tumultuous this can be sometimes, as you guys have been watching interest rates. This next slide here shows you that Fannie Mae in the month of March projected a 4.2 decrease on house prices across the nation, and turn around the next month in April, just last month, and said, oh, no, never mind, it's going to be negative 1.2. But you can go back to the CoreLogic slide, the slide that had the CoreLogic on there that showed that it's actually about 1.6 increase. The next slide I want to show you here, and we get this question a lot, is when are we going to get out of this seller's market that we're in? What's driving this seller's market? And pure and simple, we've said it before, is just the lack of inventory. So this chart here shows you months inventory of homes for sale. It takes below 6 months. If we're below 6 months of inventory, we're going to be in a seller's market, and we've been in a seller's market for the last couple of years, and most of you are aware of that. 6 to 7 months of inventory puts us in a neutral zone, and then above 7 months of inventory is when we'll be back in a buyer's market, and buyers can start getting some closing cost assistance from the selling side. But I'll tell you right now, today we're about 3.5 on inventory in the nation, especially in the Hampton Roads area where we're at now. That's just where we're at. There's a multitude of reasons we talked about before. You got a lot of individuals, and we'll talk about it in slides later on today, that are sitting in really low interest rates, and they don't want to jump out of that to jump into the 6 and sometimes close to 7% interest rates that we're in now. And then new builds are hard. It's just the cost of supplies and everything. It is, and I talked about it 2 months ago, how new home builds are starting to creep up, but nowhere where they need to be to get our inventory good to go. So that's kind of the explanation of between sellers and buyers market and months of inventory it needs to kind of get out of it. So nobody has really projected of when we're going to be out of it. So we'll be in a seller's market, which I perceive for the foreseeable future because of lack of inventory. Next slide here is, if you're watching, we talked about, I think it was in January or February, I said, we entitled it Clarify versus Terrify. If you're just watching the news and that's your only source of information, you may be hearing that there's this huge uptick of foreclosures. So the market's about to crash, and we're going to have another 2008, 2009, 2010 housing crash. We've said it before, we're nowhere close to that. We have stricter lending practices. Individuals are sitting in, a lot of equity, and I'll show you that in a slide in a little bit. They have a lot of equity, and just unemployment's down, so people can afford houses and don't lose them. So just a couple of reasons why, that foreclosures, where we're at with foreclosures doesn't mean that the market is about to crash. And you can see some of the headlines there. And then I want to show you another slide here with some more facts. You can see in 2017, 2018, and 2019, so pre-pandemic, we averaged 598,000 foreclosures a year. Okay, and then everybody's aware the pandemic kicked off in 2020, and then there was a moratorium by the feds put on the market that you couldn't just foreclose on houses because people were losing jobs, losing money, and so you'll see that it ticked significantly down on foreclosures in 2020, and the moratorium ended towards the end of 2021, and you started to see a slight uptick. But you compare those 3 years together, and it's at 388,000, so 300,000 less. This next slide will show you where we're at in Q1 of 2023, so real-time data on foreclosures. It says there was 95,712 U.S. properties with foreclosure filings during the first quarter of 2023. A total of 65,346 U.S. properties started the foreclosure process in Q1 of 2023, and nationwide, 1 out of every 1,459 houses have started the foreclosure process. And lenders repossessed 12,518 houses across the nation. So again, know the numbers of the 588,000 that we were at pre-pandemic. Foreclosures, not a good thing, not touting them as a good thing, but when it comes to the housing market, where we're at now is not an indication that the market's going to crash with foreclosures. They're still significantly down. So I wanted to make sure you guys had that information. Last slide I want to leave you on foreclosures is a quote by Claire Trempesto, executive news editor at Realtor.com, and she says, "There's no reason to panic, at least not yet. Foreclosure filings began ticking up in late 2021 after the federal foreclosure moratorium ended, as I was saying earlier. The moratorium was enacted in the early days of COVID-19 when millions of Americans lost their jobs to prevent a tsunami of homeowners losing their properties." So again, I didn't just come up with that information. It's factual on what's going on and why we seen a downtick in foreclosures, and then it's not because of as we talked about before, the housing, the equity that people have in houses, the job market's better. Why we don't see, a bunch of foreclosures. There will always be foreclosures, but a bunch flooding the market and saying that the housing market is not doing good. Okay, the next thing I want to talk about is a recession. A lot of people want to talk about, we're going to be in a recession. We've been talking about it for, a couple months now. Maybe almost a year, whether we're going to hit a recession. This slide here shows you the definition and what actually a recession is. The National Bureau of Economic Research, NBER, defines a recession as a significant decline in economic activity spread across the economy lasting more than a few months. So the GDP, real income, employment, industry procedures is declines for more than 2 months in a row, then we're possibly in a recession. Next slide here talks about the Feds just met in March, and given their assessment of a potential economic effects of the recent banking sector developments, the staff projects at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. So is a recession a possibility? Recessions are not good things. I get it. I don't fully get it, but we have sympathy for what a recession, what that does to people losing jobs and wages and things like that. But let me share with you what that does, what historically it has done for the housing market coming out of a recession, and then some pros and cons as well too. So this slide here will show you pros and cons of a recession when it comes to the housing market. Again, this is not saying there's pros when we're in a recession and people are losing jobs and we as realtors are really excited. Just really talking to the housing market and what it historically does. So some pros is less competition. So a recession often puts people in difficult financial positions when sometimes they have to let the bank take their home. And that's not a pro for the individuals. That means it's a pro because it puts more houses on the, could potentially put more houses on the market. We talked about foreclosures are not on an uptick, but that's pros and cons of buying during a recession, that there'll be less competition, less people competing with you. Lower prices. So you've seen, we talked about that before. The prices are not plummeting, and we don't project that they're going to plummet even coming in a recession. But then lower rates. So I'll show you in a future slide here what has happened in the last 6 recessions that we've been in our country and what it's done to mortgage rates. Cons, obviously stricter lending practices, so they'll buckle down even stricter than they already are to make sure that they're giving individuals that can truly afford a house, which then lowers the competition as well. Fewer options available. We just have less options available there. And then economic uncertainty that any recession provides. So those are some pros and cons that come with the recession. But let me show you the 2 points I was talking about before. Doesn't mean falling prices. And again, I don't just say that to say that. Here's a chart that shows you the last 6 recessions: 1980, 1981, 91, 01, 08, the big one, the housing crash because of poor lending practices. And 2020, 4 of those 6, actually house prices rose. The most recent one in 2020, it rose 6% on house prices during the recession. And then, as I said before, this slide here shows you interest rates. In every one of the last 6 recessions that we've been in, interest rates have fallen coming out of it. So the most recent one in 2020, it came down 1%. Even in the housing crash of 2008, interest rates were down, mortgage rates, were down 1.13%. So not all is lost when it comes to the housing market, is what I wanted to point out. If we go into a recession and coming out of it, could be some good nuggets for you if you're thinking about purchasing here in the next few months. So I want to make sure we shared that with you. The last 2 slides I wanted to leave you with is housing market is as strong, if not the strongest, as it's ever been. And I'm going to show you 2 slides why I say that, and some facts behind it for you. This first one here talks about current rate of existing mortgages. And another reason why we have an inventory issue, individuals sitting in 5% or less interest rates. Over 80% of Americans are sitting with an interest rate of less than 5%. So you can kind of see the chart here. So again, why would somebody want to, if they're not forced with a military move or a job move or a relocation, why would they want to jump out of that interest rate to jump into the 6.5, 6.6s and 7s and stuff where we're at today? Again, that's why the housing market is so strong. We got a lot of homeowners that actually own homes with a lot of equity, which is this next slide I wanted to show you. And that number is over 68% of Americans today are sitting in a house that they either own free and clear, they don't owe any money on it, or they have 50% or more of equity in it. So that's why we tell you, again, it's not just because we're realtors and we want to sell you something. We're not sales individuals. We want to educate to make you confident. And we try to do that with these slides here and pure facts over emotion, to show you that, getting into real estate, purchasing real estate is one of the best, can be one of the best decisions that you make. You'll gain the most equity out of anything out there. It's a good decision. And so, my hope is that by educating you each month here, that you feel educated and confident to reach out to a trusted real estate agent. If you're in the Hampton Roads area, or if you're military and you're somewhere else, reach out to Journey Home Realty, or your agent can put us in touch and do a referral to us. If you're coming down to this area, and vice versa, we can send referrals to wherever you're going, wherever the military may be taking you or your job may be taking you, and find you a trusted agent that is willing to educate, to make you confident, to find out if it's the right time for you to purchase a home. So hope this information helped this month. We'll get it out to you guys. We're just a little bit late on this one, about a week late on this one, and I apologize for that. But if you got any questions, reach out to us. Our handles, and we just look forward to talking to you. Hope you have a great rest of the week, a great Memorial Day weekend. Stay safe and stay blessed. Have a great day.